how recession is calculated. Technically, recession is when the growth of economy as measured in GDP or any other terms is everybody started, all big investors started selling gold. For silver today is going up on two reasons. One is it has become a high. Silver is ruled by Moon, Mercury and Rahu. All are highly emotionally, the big traders, big investors, big fellows are obviously going to tighten a little bit. When the big money starts to erode from the market will.
Sometimes gold has fallen at the beginning of a major crisis before moving much higher. Now, what we've noticed though very recently, so what do you expect to see in gold and silver and why?
So if people don't buy and hedge on gold, and it will fall, they will let it fall. Why would they let it keep going up? Do we see gold going up to 5?
And this is a very bold question, that gold could actually fall below the 3,000 USD mark.
I believe that end of 2026, for whatever it is worth, I would peg gold to be between 3. There's only one formula which is helpful in predicting silver and gold prices. It is actually the ratio between gold and silver ratio readings above 8.
Professor Krish Murali Eswar, welcome back to Inner Habit. Sir, how are you?
Very well. Thank you very much. Thank you so much for inviting me back again in your show, Shruti ji. Please go on.
Sir, today we're going to talk about gold and silver and its behavior during a recession. And the reason we are talking about this is because you've previously said that we're already in a recession, even though many investors don't recognize it yet. So what makes you believe we've already entered it or entered that phase? And how does this differ from the official economic narrative?
Let's understand how recession is calculated. Technically, recession is when the growth of economy as measured in GDP or any other terms is slowing down quarter to quarter. That has not yet been reported and experienced because the quarter just ended June 30th, April, May, June quarter. Results are not yet out. And you know how most governments around the world are democratic governments. They are politically elected. They really don't want the bad news to be shown to the public as soon as they receive it. So they will soften the shock. They will ease it out over a period of time. So nobody wants panic in the society. Nobody is going to admit that, okay, the country is having massive inflation or the society is going through recession and therefore all of you should cut your cost and things like that. But there has been an inkling or an indication towards this when Prime Minister Modi of India about a few weeks ago publicly told everybody, cut down foreign travel, stop buying gold. Why? Because of the pressure of the Indian rupee. The valuation is dropping, demand for dollar is increasing. If we end up importing more and more, if we spend more and more on foreign travel and spend money in US dollars, obviously we are not going to be able to sustain this. This is the official reason why that has been given to the society, to the public. But there are so many things that have to be guessed and extrapolated from this. So is there an underlying economic weakness? Let's put it slightly differently. Are we having an economic impetus in a country like India to push economy at a faster rate than what we have been experiencing 2 quarters back? The answer is very simple, right? Even a child will be able to tell you that no. Where is the economic impetus? Look, economy will grow on two reasons. Broad reasons are only two reasons. Reason number one, there is public spending. That is, government is spending huge amount of money. They are building roads and dams and railway infrastructure and putting money on defense and education and healthcare and pumping in huge amount of capital into infrastructure development. That all of that money flows back into various economic sectors and companies profits grow up, and that happened for about 8 9 years in India till about 2024 or so. So we saw that the growth story of India basically primarily driven by the public spending, that is the government spending. The government realized that this is not sustainable. Plus, we also have a coalition government in the central federal government in India today. So, obviously, we cannot continue to spend money at whims and fancies of one party or one leader. We have to take into consideration the satisfaction of every other party which is sitting in the central government today. So, money gets allotted to various states, even though those states are probably not going to contribute to the GDP growth as much as we want it to be. So, what else can we do to push this economy forward? Private spending needs to come in. So that means you and I will have to buy more cars, more houses, travel more. We have to buy a lot more items. We have to, decorate our house more and more. We have to spend more money on our children's marriage and education, and discretionary spending should go. We should buy more clothes than what we actually need or what we can actually count in our cupboards and so on and so forth. Is that happening? Especially after February 28, 2026? Answer is no. People are cutting down cost. People are cutting down expenses. Okay, you go to any mall in any major city. Yesterday, for instance, I was in one of the malls for picking up my spectacles, which I have given there for service, and I picked it up, and every shop has a buy two get three free. Okay, this normally happens in India during Diwali times, and some festival times. There is no festival right now. Why are they putting buy one, get one free, buy two, get three free? Nike shop, they have every single showroom in the mall is selling discount sale at this point of time. And the crowd is going down. People are not spending as much as the government wants them to spend. The car sales are down. It was great. GST was reduced in the in the last quarter of last year. That was around October, November, December quarter. The GST rate went down significantly on car. Massive car sales happened, but January, February, March, it's come down. April, May, June, it's completely down. Nobody wants to go for a car. Nobody wants to buy a house. Today, what was available in India in a city like Bangalore city 3 months ago is available at 15-20% cheaper rate. If you have money, you can buy the same property at 20% lower rate today. That's the truth. So, ground reality shows that there is something brewing here. Let's wait and see. We are already talking, when we are doing this recording, we are talking about the July 9th or so. And by July end, August, we will start getting the April, May, June quarterly report out from big companies. Let's see what the report shows. Once those reports starts come out, and then people realize that consumption is not taking place, public spending has already come down, private spending is coming down, And that's the start of recession. GDP, what is GDP? The gross domestic produce. Where are these produce going to go? To the people's stomach, people, houses, people's bodies, people's, products, and so people have to consume. Either the government has to consume or people have to consume, and neither of them are consuming. Where is the GDP going to grow the way we expect it to grow? So it may take 1 or 2 quarters for people to actually come to realize the newspapers are beginning to write that actually we are seeing slowdown in economy. So it'll be a soft landing. It's not going to. They will soften it because that's the way the democratic political system works. So I don't expect a dramatic change just because Krish Murali Eswar thinks there is, inflation or recession. Not going to happen.
Fair enough. Now, how different do you think it is from 2008 and or 2020?
Well, see, it's pretty much the same. It's not going to be any different this time either. So the only change is that in 2008, there was a mortgage bubble. What did it mean? It really meant that every Tom, Dick, and Harry on the street was given home loan, leveraged significantly beyond their capacity to repay that loan. At some point of time, it just burst. People were defaulting on their payments, and suddenly they realized that these guys are not even capable of buying a house. Why did you go and give a loan to that? So it was a housing loan bubble that really, the mortgage bubble that really burst at that point of time. Today, we don't have that kind of a bubble. Okay. So, but the problem here is multifaceted in nature. So there is the sudden um, drama that happens every day by one of the most powerful leaders in the world. You know who I'm talking about. One day, the leader says that, okay, the deal is on. Next day, he says the deal is off. One day, he says, I love these guys. Second day, he says, I hate these guys. Okay, I don't want to deal with them. They are lunatics. Then say, oh, these guys are great. I want to make this country great again. So it's it's clown, it's crazy. This is comedy, right? In a way, but then it's not comedy, it's actually very sad. How do you plan with a leadership that doesn't bring stability, what we knew as the world order of functioning before 2025 has completely turned over and changed in 2026. We don't have the same world order. So the chaos has come in to the world order. So the trading systems have completely gone out of the window. Stability has gone out of the window. Confidence has come down. So when confidence comes down in the leadership of the world, their policies will start to show up, right? How do you, in a country like Australia, which is somewhat insulated but still dependent on many, many things like oil imports, for instance, how do you plan a country where you have no idea what's going to happen tomorrow?
Well, we cannot, honestly.
That's the point. So when that happens, there will at some point of time sudden knee-jerk reaction by somebody or the other, which will send the stock prices on a tailspin, inflation on a tailspin. One interest rate hike is sufficient for the whole market to crash. Panic will set in. See, that's the point. Okay. Once the panic sets in, anything can happen because after all, the whole market is driven by fear and greed, and it's emotion, right? So people feel scared, then the fear index significantly go up, so VIX go up, everything goes up, and stock prices fall. Well, an example I will give you: Samsung. What a beautiful company, right? Their profitability has gone up significantly just about 3 days ago, right? They have reported a record sales increase. Why did the stock price fell by 9%?
I have no idea. That's a very good point.
Huh. So this really means that there's something crazy going on in the minds of the people. People are anticipating severe uncertainty. Okay, the big traders, big investors, big fellows are obviously going to tighten a little bit more. When they tighten a little bit more, and when the big money starts to erode from the market will panic. Look, how much money you have in the market, I don't know. How much money I have in the market, very little. I don't even count in the stock market. I'm too insignificant. Even if I have $1 million in the market, I am still a small fish. And I don't have $1 million. That's a different story, right?
Just clarifying.
Just clarify.
No, I'm actually holding cash at the moment. I'm not looking to enter the market for another 3-4 months when I see a massive dip, I guess.
I want the market to fall by 20 to 30% from today's level. Stocks to fall from 30 to 70% from today's level. Index, for example, Nifty 50. If and when it touches 21,000, Krish Murali Eswar will consider investing in it in small tranches. I expect the index to stop falling between 19,000 to 21,000 in 2027. Same thing with gold. I expect the gold to fall down to $3,200 to $3,600 per ounce. It's about $4,000. Super strong support at 4,000. But every time it attempts to go up by $100, $200, it falls back to 4,000. It's happened 4 or 5 times in the last few weeks. Yeah.
And I've been watching it very closely because I'm really waiting for that 3,000, 3,600 mark because that's where I want to invest as well. And I suppose then what I'm going to ask you is with regards to gold, because we are going to be discussing gold anyways. But sometimes gold has fallen at the beginning of a major crisis before moving much higher. Now, what we've noticed though very recently is we will probably see the recession intensifying perhaps in late 2026. So, what do you expect to see in gold and silver and why?
I expect the gold to draw down a bit. Why? Reason is very simple. The big fellows want to accumulate this as a hedge, right? No big player will want to accumulate gold when it is $5,000 and above per ounce at today's market conditions. Okay, what is the actual reason why put money on gold today from a big investor's perspective? It doesn't give us rent. It doesn't give us interest. It doesn't give us capacities to scale up my business or my industry. Therefore, it's just sitting in my vault. If I'm going to just buy a few tons of gold, keep it in the vault, it's just going to sit there. It's going to do nothing for me. Unless the prices go up, I'm not going to make money in gold. It has gone up nearly 20-23% over a period of 1 year. It's gone up nearly 134% in the last 5 years' time. So it's little more than doubled over the last 5 years. So it's given me returns. So now, do I anticipate it going up by 10%, 15%? No, not in the next 1 year, unless I let it fall. So that's the beauty of all of these products and commodities and stocks. It works with gravity. If it has to move up, it has to work against gravity. And the only force that will push it against the gravity is money flowing in. So if nobody puts money, all things will fall. So if people don't buy and hedge on gold, and it will fall, they will let it fall. Why would they let it keep going up? Do we see gold going up to 5,000, 6,000 from today's level to next year? I am not too sure about that. Okay. But if it falls to 3,600, 3,200, or $3,000 per ounce, then hey, yes, that's a pretty attractive price, because now it would have given up that 20% rise that it had over the period of several months now, and it's come back to the last year level. So it has already gone up to 5,000, come back to 3,600, 3,200. So will it fall any further from there? Of course not. Even 3,400 is a fairly good support level for gold. 4,000 currently is appearing to be a super strong support level. Okay. Even if it goes up, do we expect it to touch back to 5,000 in the next 6 months, 1 year? I don't think so.
So you're saying that even this recession that is sort of currently not spoken about, or it hasn't been recognized, will not impact the prices of gold. If anything, it could go down.
It has to. It has to go down. The reason is, like I said, where will I have a choice? Let's say I'm a high net worth individual. I have choice. I can put it on land. I can put it on stock market. I can put it on gold. I can put it on copper. I can put it on silver. I can put it on my own business. I can put it on preserving myself. I can buy government bonds. I can do forex. I have ton of options for me to put my money on. Why will I put it on a single instrument where I don't see a strong upside happening in the next 1 year?
Yeah, this is true. But there, okay, then I'm going to ask you.
Actually, it will fall down even further. If there is a stock market crash, all my money will go into the stock market. Why will I put it in gold?
Point. Because stock is the best time to buy is when it's going down.
Yeah, if it falls by 30%, 40%, everybody's money will move into the stock market. Why will they even put? Because the upside will be so high in the future. Whenever it happens, let it happen over a period of 2 years, 3 years' time. It can double from there. But do we see gold doubling from here? No.
Are you saying that even in the long term? I mean, I hear so many financial experts saying, oh, gold will get to 5,000 this year and then gold will be at 10,000 next year. So are you saying that that is also cannot be that accurate?
Possible. It's possible only when there is a severe crisis. If there is a severe economic crisis that comes in, okay, let's say a monetary policy crisis or a monetary crisis, or if there is a fundamental shift in the monetary system and they peg gold as the basis for the new monetary system that comes in, gold will skyrocket.
Okay, so then let's look at silver. Silver in a recession. How does that, I mean, does it act then as a precious metal? Obviously not. It would act as an industrial metal, but silver, there's talks about it being short, like there's a shortage in India because they've stopped a lot of the imports on silver currently. I just saw it in the news today. How will that act in a recession?
Silver is an industrial metal. Basically, it used to be for two purposes, right? So, for example, in early 1900s, 1800s, or even prior to that, during the Spanish era, wars were fought for silver. The word UK sterling pound was actually the word borrowed from 1 sterling pound of silver. So you could actually exchange at one point of time, take a sterling pound note to the bank, and then they will give you silver. Okay, but that dealing happened sometime in 1930s and then happened in 1960s when Nixon kind of completely changed all the systems, and I said, I'm not even gold, forget it. US currency is far more superior to the dollar and far more superior to gold, start using it. So silver and gold turned out to be more a hedge and just a safe haven for people to keep in their homes and vaults and things like that. Second World War, everybody knows in the world, was fought for gold. It was meant for accumulating gold. So it is that we have seen this happen many times. We have seen Spain lose their entire stock of silver to United Kingdom. UK then lost all their gold to United States. Now, same thing is happening. $35 trillion or debt. How are they going to even repay that? They have to do something very dramatic for them to even repay their interest on that loan. So, will they come up with a new monetary system which will completely take them away from petrodollar or anything else and bring gold back? If that happens, then we are going to see an impetus on silver and gold. Other than that, silver today is going up on two reasons. One is it has become a highly speculative metal. Astrologically, silver is ruled by Moon, Mercury, and Rahu. All are highly emotionally connected with the human mind. And therefore, it can cause that illusion in people's mind and start to. So the speculation has started. So it's become a speculative metal, which is why the volatility is as high as any other high volatile product like Bitcoin, for instance. It goes up 150%, 200%, falls by 80, 90% in no time, and things like that. Second is the industrial demand. The industrial demand, has it come down? No. Electrification in Europe is still going to go up. Okay. And electrification in various parts of the world is still going to go up. They need silver for it. Silver is needed for many, 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 many products, modern day products and modern day cars, and many things require silver, for instance. So silver is going to be in demand. Is it going to fall? As demand goes? No, it's only going to increase as economy grows and consumption grows, and many more such new products requiring silver comes into play. Silver is required more and more. So, but silver is a speculative metal. So you should have a strong stomach to deal with silver. It could fall by 50% from today's value, and it can shoot up by 200% from today's value. But eventually it will go up. But I believe that today's rates are still fairly overvalued for silver.
I do actually agree with that point, actually. And when we look at it, the reason I agree with that point is because, we expect, just like gold at this moment, I think it's a bit on the higher side. I feel that it will come down. But without asking for an exact prediction, what price range do you think is realistic for gold by the end of 2026 and silver by the end of 2026? And if the recession thesis plays out fully, where could these metals be trading by the end of 2027?
No idea. I have no idea. I have no idea how to predict. If you know how to predict, I would love to hear from you. I'm not sure anybody in the world has any idea, including the greatest minds of people, and nobody has a clue. That's the truth. That's the honest fact. That's the truth.
Is it because we've got the person who keeps saying different things on a day-to-day basis, or do you seriously feel that is your genuine answer?
Look, the fact of the matter is there is a very serious crisis the world is going through. It's not just about one leadership. It is a problem of every economy in the world. Most economies are over leveraged. And fundamentally, productivity has not gone up as much as the debts have gone up in every society, in every country in the world. There's hardly any country which is having a surplus economy today. Everybody is on a deficit economy. Can you run? Shruti, you tell me you are running a family. Okay, simple things. How long can you go on borrowing money to run your family? At some point of time, you have to have a hard reset. And I believe the hard reset time is come. It's coming now.
And you mean for everyone, I suppose, whoever's borrowing, whoever's living on debt and whatever.
That's right. Let's take a look at the past to see how we can probably look at how the prices will play out for gold in the future in this 2026. So let's take 2008. Okay, so the deflationary recession that happened in 2008, the demand collapsed.
It did.
The prices fell, dollar spiked, gold dipped first. Okay, everybody started, all big investors started selling gold for liquidity. Okay, then the Feds started flooding the system with money, and then the rally started. Okay, so that is a beautiful clue. That's a fantastic clue. Unless we see a big fall and the Feds and various central banks of the world pumping in huge amount of money into the system, we don't expect the gold and silver to really go up. Silver, for instance, it lost 60% in 2008. In 1 year, it fell 2008. Why? Two reasons. Half of the demand came from the industries and factories. They went quiet. Demand fell. Okay. Much sharper drawdown than gold, as usual. I told you why, astrologically. But then it followed a violent recovery later on. Okay. Right. Now let's go back 1970s style. 2008 we have talked about. Let's go back another 30 years. Right. Very weak growth with a sticky inflation, what we call the stagflationary recession that came in 1970s. This was the silver's best environment because it fired on both engines. There was a monetary flow that came in, a safe haven. Silver was considered a safe haven. It was an inflation hedge. So people started bidding for it, and the industrial demand didn't quite collapse, unlike 2008. Okay, the industrial demand did very well, and gold also did well at that point of time. Even though that was also a stagflationary period, 1970s, okay, and it outperformed, but silver outperformed 2 to 3x more than gold at that point of time. Do we see that at this point of time? Absolutely not, my friend. I don't agree, or I don't see at this point of time that silver is having a similar scenario playing out like it happened in 1970s. In 2008, it happened. I am seeing a similar 2008 scenario playing out this time. I don't see. I'm not an economist. I don't understand these things very well. But whatever little knowledge that I have, I can tell you that this is not really going to be a 1970s repeat, more a 2008 repeat. Probably far worse.
My last question for you then, sir. Do you feel that gold, and this is a very bold question, that gold could actually fall below the 3,000 USD mark?
I don't think so. I believe that end of 2026, for whatever it is worth, I would peg gold to be between 3,400 and 4,400, 4,500. In that range is where I will peg gold to be by end of 2026. Okay. Do I expect a bull run? I am not expecting a bull run in 2026. Maybe 2027, 28, because I need a big fall and then a jump up in that. Okay. So the base we know is around 4,000 to 4,900. So that's the base. As long as it is trading in that range, it's not going to go anywhere. It has either break out of 4,900, it has to fall below 4,000. If it falls below 4,000, then my baseline is $3,400. Do I expect to fall below 3,400? Personally, I don't, but I'm not an expert on gold. Okay, so that's the baseline number for 2026. Now, silver. My baseline for silver is $70 to $90. Okay. Now, I expect in that range by end of 2026. Do I expect a bull run? I don't think so. But like I said, silver is an highly emotional play. It could push it up to 110, but I want it to cross $90. Then only I will even anticipate 110 to $150. Okay. But if it falls, which is probably most likely from the current level, I expect it to touch around $44 to $54. I love to see it fall down to 44 to 54 so that you and I can actually build a generational wealth. This is actually a year of building generational wealth.
I actually feel I missed that boat somehow. I actually knew it was going to go up and I didn't buy it at that time, and I feel stupid. And now I'm waiting for the fall to feel good about it. So yeah, that's how it is. But the interesting thing I should say, Professor Krish, is
So let me just give you one sorry interruption. Only one small thing traditionally over last whatever 4 or 5 decades of silver versus gold play, there's only one there's only one formula which is helpful in predicting silver and gold prices. It is actually the ratio between gold and silver. Okay. Now, gold and silver ratio readings above 80 is to 1, especially if it is 100 is to 1, then historically this has marked silver's biggest undervaluation. Put money in silver, you will be able to see a big swing up. But today it is at 64.1. 64 is to 1. That is the valuation today. Okay. So that's a very easy signal, right? So silver is already repriced significantly and is no longer historically cheap relative to gold. I won't buy silver at this point of time. I want silver to be 100th of gold.
which means it's undervalued basically.
Oh, significantly undervalued. Then blindly go ahead and hedge it on silver. Of course, you use your sizing and position sizing and things like that. Certainly you can do. But if you see silver at, let's say, 40 is to 1, 50 is to 1, okay, then silver is significantly overpriced, gold is underpriced. So unless you see a lot of money flowing into the future, Fed is printing huge amount of money, then wait for silver prices to crash. Book profit on silver, don't enter gold. But if you see that Fed is going to be printing a truckload, shipload of money in the future, and silver prices are not going to fall, gold is going to, then buy gold. That ratio is most important. In my research, I only found that ratio between gold and silver to be the golden ratio to watch out for. And I watch it every day. That's why I'm able to tell you at this moment, the very moment that you and I are talking, the ratio is 64.1. 64 is to 1.
Yeah, and I totally agree with you. We talk over here, you and I are talking about whether this can go below 3, gold can go below 3,000. But I'm just having a year, like you said, so unpredictable that I will not be surprised if it does. Do you know what I mean? You just don't know what to expect.
For that to happen, for gold to touch, even breach 3,400, I don't know, there must be a calamity of sorts in the world.
Time will tell.
Time will tell. I don't expect such a calamity astrologically, though. So let's hope.
Fair enough. And Professor Krish Murali Eswar, I want to thank you so much for this podcast. I totally appreciate it. Thank you.
Thank you very much, Shruti, for having me on this podcast. I enjoyed having it, and let's hope that we will meet again and talk more about the world in the near future.
We will for sure.
Thank you.